All right, hello and welcome to this week's edition of Murphy's Market Minute with Elliot Omenson.
Nathaniel Vossman.
I tried to get Rip for this video, ran home in between appointments to grab him, and made the mistake of letting my dogs run on the property for a hot minute, and they went into the creek. So
Nice.
he's still out.
A little too dirty to come into the office.
Oh my goodness! So even though I have been told by multiple people he's the most integral part of this video we send out.
I would agree. He's the main character here.
Yeah, right. So this Murphy's Market Minute should be pretty short, quick. Things have been rebounding steadily, obviously with some, volatility. I think we hit the biggest low April
Probably 9th or so.
Yeah, April 9th. And then
April 8th.
Yeah, it spiked up and then dropped back down, and we hit another, almost went all the way back down to that April 21st, and it's been climbing ever since April 21st. So now, yesterday was interesting in the market because the GDP report came out, and initially it was not good. It was a contraction of 0.3% when the economists were expecting it to have grown at 0.4%. So 70 bips, if you're familiar with bips, 1 bip's 1/100th of 1%. So 70 bips off of what was expected. But really, there's nothing bad there. Mostly just because one of the things that a lot of people might not be familiar with is that anything that we import is offset against our GDP output. And everybody front-loaded a lot of purchasing businesses. We imported a significant amount of goods. And so imports increased by 41.3%, which is the largest rise since 2020, just due to those businesses accelerating purchases ahead of the implementation of new tariffs. And then those imports are subtracted in GDP calculations. So that had a significant drag.
Yeah. Another thing that I always have found kind of goofy that is part of this equation that adds to the GDP growth is government spending.
Yes. Yeah. Isn't that insane?
I think it's ridiculous that you can get a president in office who's pushing for growth in government, and then all of a sudden their GDP numbers can look great if they start adding hundreds of billions of, not trillions of dollars. And they get someone doing the opposite, doing really the right thing, if we're being honest.
Absolutely.
And all of a sudden, your GDP numbers can go negative. And then, let's say next quarter, their GDP growth is slightly under zero again. Then people are going to be yelling about recession.
Yeah, recession, right?
Even though if he had, boosted government spending, we wouldn't have this issue at all. But
no,
I find that goofy.
And how in the world can you count government spending, which strictly comes from the back of taxpayers? They produce nothing.
Yeah.
Nothing is produced by the government. Nothing. So all you're doing is taking something that was produced by the normal citizenry, and then you're spending it on. You're just spending it, and somehow that's adding to your GDP. That absolutely should not be counted in GDP because you're not producing anything, right? And so that leads us into another thing I'm going to get to in 1 second. But now one legitimate downside out of this GDP report is consumer spending grew by 1.8%. That is the slowest pace since mid-2023. So, people could be, being a little more cautious, trying to save more money. Now, to your point, another report that came out was the jobs data. And I found this to be really interesting, and depending on what side of the political spectrum you are, you're like me and you think this is awesome and incredible, or you're going to be upset about it. My apologies. But U.S. employers announced 275,240 job cuts, with 216,670 of those coming from the federal government. 79% of job cuts were attributed to the federal government reductions initiated by DOGE. Those layoffs primarily targeted probationary employees and obviously are all part of the plans to downsize the federal government, if you're into that kind of thing.
Yeah. So unsurprising data there.
No, but that does go to kind of back up what you were talking about. Federal government spending is down. It decreased. And then we had a bunch of imports. So, yeah. So again, the underlying, I personally believe the underlying fundamentals of the economy are rock solid.
Yeah.
The market's proving it wants to do what it's built to do, which is go up.
Yeah, I think some of that is also a good indicator of the market are some of these like mega cap stocks because they do have a lot of weight within something like the S&P 500. And so yesterday, Meta and Microsoft, so two of the biggest companies on the planet, had their earnings reports, and they both beat earnings by a pretty significant amount.
Yeah.
And so that's part of why today, like the S&P's up a decent chunk. It's really riding off the back of that. So companies like those, of course, are up big, but even like other tech stocks, AI, like NVIDIA's up big.
And I think Netflix has been doing well all year, haven't they?
Yeah, I believe so. Yeah. But it's like indicators like this. I think Meta even like raised their guidance, so like they're even projecting better numbers than expected. That's a pretty strong indicator. Some future growth.
Yeah, and so we've always had most our portfolios that are in the market is we use for the growth portion of it because, we have annuities in life for the safe and conservative portions. And so generally, when we're all into the market, we're pretty heavy tech. And I still continue to believe that's the place to be if you're looking for growth.
Yeah.
So anyways, that's all for this week's edition of Murphy's Market Minute. We do appreciate everybody that came out to the shredding event, and that was a pretty yummy food truck. We got lots of compliments on that. Also, just so everybody knows, we have a shredding truck come year-round. We have a lot container here. You don't have to wait for the shredding event. You can bring your stuff to us anytime you feel like, and we'll get it shredded for you. So until next week, this is Elliot.
Nathaniel.
Signing off. See you guys.